The Answer online at 560theanswer.com, on the AM 560 mobile app, on your Alexa-powered smart speaker, and on TuneIn, iHeart, and on Odyssey. Only the biggest stories, only the biggest guests, and only the biggest opinions. This is AM 560, The Answer.
Top of the morning, Dan and Amy. So consumer price index rose 6.5% in December. It's year over year. In 2022, we had the first 6 months where price increases, inflation increased.
Right.
And the last 6 months, inflation decreased. The average CPI for 2022. So now prices are stabilizing down, but the question is, at what level do prices stabilize in 2023 and 2024? 4%, 5%? We still have a real Fed funds rate that's negative, so Fed policy remains highly stimulative. And Powell, the mystic who heads the Fed, has said the Fed will continue to move in a restrictive direction. So where does this go? By the way, that's looking at the overall, but those of you who go to grocery stores, I'm not one of them.
I am.
Food, the CPI for food at home, it's down, but it's still at 11.3% year over year.
You can't even find eggs. I tried to find eggs yesterday, and they're up 60% from what they were last year. You can even get your hands on some.
Yeah, there's a whole, that's a specific good where there's a whole argument going on between the farmers and the grocery store chains. But the larger question of irrational exuberance about a steady, albeit incremental, decline in inflation over the last 6 months.
There's nothing to celebrate. Guess how much? All right, I want you to answer this question. Family of 4, we went to McDonald's. Nobody ordered anything extravagant. Guess how much it cost?
Can you order anything extravagant at McDonald's?
Well, you could, add on a shake or a McFlurry or.
Okay.
$60.
Well,
Potbellies, the 4 of us, $72. I mean, that's a. I'm sorry. That's reality, folks.
I've noticed the price of my Chateaubriand has ticked up a bit too, and I wasn't happy about that.
Stop it.
For more on this, we're pleased to be joined by Timothy Fitzgerald. He's a professor of business econ at Texas Tech, the Red Raiders, the home of, alma mater of Pat Mahomes.
Oh, that's right.
In case you're thinking of NFL
the guy
playoffs.
We passed up on the draft, yeah.
Yeah, we
that
thought
guy. Him and
Trubisky
Deshaun
would work
Watson.
out better.
Yeah, how'd that work out?
He also served as the chief international economist at the White House Council of Econ Advisors in 17 and 18. Professor Fitzgerald, thanks for joining us. Appreciate it.
Yeah, I'm happy to be with you.
So what about the stabilization of prices? We're seeing this incremental decline that I described, but where does it stop? I guess in part that's predicated on where does Jay Powell stop with moving in a restrictive direction?
I think actually, one of the things that I focus on is the fuels market, and one factor that has helped drive inflation has been oil prices. And oil prices exploded in 2022 in part because of recovery around the world, but also because of the war in Ukraine and geopolitical tension around that. And we had a period of very high crude oil prices, which led to high prices at the pump for gasoline consumers. Fortunately, for the holidays, those consumers were able to enjoy a little bit of price break as we go into the holidays, and that's helping to take some of the momentum out of broader inflation measures across the economy.
But the gas prices are back up. I mean, here in Chicago is about $2.99 before Christmas. And then after Christmas, we got back, and it's $3.79 again. And I know they've added some state taxes that were due, but what's that about?
Well, one of the key things to remember in the oil market is that no consumers actually buy crude oil, right? Everybody needs gasoline or diesel or maybe even indirectly, you're going to consume heating oil or jet fuel or something like that. And so the refining capacity is crucial to understanding how the price at the pump is going to evolve. one of the really interesting things when you look at the refining sector is to notice the dramatic reduction in overall capacity for oil refining across the country over the last couple of years.
And but I mean, and let's understand why that is, because of course the president has explained it to us, as have many members of Congress. That's evil oil companies trying to artificially inflate the price of gasoline to rapaciously fleece the American people so that they can go to their golf clubs on their private jets, right?
Well, you use more adverbs than I do. It is clearly the case that reducing the amount of available refining capacity is not going to help the consumer.
And
as we see refineries close and not reopen, it just leaves consumers more and more at
companies making those decisions.
Well, it could cost money to run a refinery. Mm-hmm. And as oil companies earn profits, they reinvest some of those profits back into updating and expanding refineries. Refining margins are getting pressed. Costs are going up. Financing costs are going up. Other kinds of compliance costs are going up. And politicians are talking about trying to seize windfall profits from the oil companies. All three of those factors together all point in the same direction: less refining capacity and more exposure of the consumer to volatility in the crude oil market being translated to volatility at the pump. And furthermore, what you were talking about before, with that then plays into inflation and just makes it harder to keep the cost of everything from, eggs to soup to nuts, all the way through the economy is going to depend on the price of fuel.
When you make capital investments, you're looking long-term, particularly investments on that scale with respect to refining capacity. Is part of the explanation also the big three automakers in this country all moving in the direction of not producing gas-powered automobiles anymore? All the three big automakers here are talking about EVs in the near term for as far as the eye can see.
Yeah, I think that's actually a big part of it. But it is important to remember that even if we get to a place where it's hard to buy a brand new internal combustion engine, people are going to continue to buy and sell internal combustion powered vehicles in the secondary market. And so we're not going to be, quote unquote, off of oil in some short politically motivated horizon. This transition may take place. I mean, we're heading more and more in that direction. EVs are getting better, but they're still not a perfect solution for everyone. I mean, you all live in Chicago, right? You know that it gets cold there, and you know that the range anxiety for EVs goes way up when you got to run the heat in the car. Mm-hmm. And more even than that, think about how much it costs to buy a new EV. It's multiples of what it costs to buy a gas-powered car. And so the people who are able to afford the luxury of an EV can be insulated from gasoline prices, but regular people and working people are going to continue to be susceptible to the variation in the oil and gasoline markets. That's the point that I think is really important, because, as you point out, the oil companies are looking at the long-term demand and saying, well, maybe it is and maybe it isn't worth making these kind of investments, particularly in an environment where it's a little bit harder to do so because of financing costs or other kinds of compliance costs for the refining industry.
Yeah, and of course it bedevils me to no end that you have people who are working people who are more impacted, subject to, negatively impacted by these policies, underwriting, five-figure subsidies for people to buy $90,000 EVs. That reverse Robin Hood from all of those would-be Robin Hoods is interesting to me as well.
If you could find me a 5-figure EV, I'd be excited. I mean, they're up into 6 figures.
Right.
Yeah, right. Fair point. One other thing too, this stopgap measure. Well, that's what I'm terming it. You tell me if that's accurate. The stopgap measure by the Biden administration to go to Venezuela to get oil supply to go to the Saudis and beg OPEC for more production. This is a way to avoid having to encourage, incentivize, increase refining capacity here, because we want to move in the direction of EVs. We want to move in the direction of the marginalization of fossil fuels. And so in the interim, we'll just go to theocracies and dictatorships in South America to get our oil supply.
Yeah, but remember that's buying crude oil, okay? And so then we're going to bring that to the United States and try to refine it in our refining complex. We don't have the capacity to add more oil. It doesn't matter whether we buy the oil on the market from places that we don't share our values, or if we encourage more production at home. We're still going to hit that refining capacity constraint. Let me give you a really good example of that. In the summer, the administration was very concerned about how oil prices were high after the Russian invasion of Ukraine, and so they tapped into a stockpile of crude oil that's called the Strategic Petroleum Reserve, that is basically a buffer for oil markets. It turned out that as they released that oil from the reserve, they had to export the oil because there were no U.S. refiners who were able to take on that extra capacity. And so it doesn't matter whether that comes out of the Strategic Petroleum Reserve, or if we buy it from Venezuela, or if we produce it ourselves here in Texas or in the Gulf or wherever in the United States, without the entire supply chain for fuels from crude oil all the way to the gasoline pump, then we're not going to have the ability to actually help the end consumer, and we're going to lack the ability to control a key factor that's driving inflation across the entire economy.
So should Americans expect the sort of volatility and then spike in prices that we saw last summer, again this summer and into the future, until this capacity issue is resolved one way or the other?
I think you would be naive to think that gasoline prices are going to remain low as we head deeper into 2023. And furthermore, if we don't do something about the refining capacity, I think we can expect these swings in gasoline prices attributable to refining capacity constraints for the foreseeable future. I mean, we're probably at least decades away from really beginning to have an energy transition that's going to help the average American. And it's great that people who have 4 or 5 cars can have an EV parked in their driveway and feel good about it. But until the people who have to use a vehicle to get around can actually get to where they're not going to depend on having fuel in the tank and have a viable electric vehicle option, then I think you're going to look at continued swings in these gasoline prices that are attributable to the refining capacity that we're losing.
Well, I mean, as long as Gavin Newsom feels good about himself, that's the important thing to me. Timothy Fitzgerald is professor of business econ at Texas Tech. He served as the chief international economist at the White House's Council of Econ Advisors in 17 and 18. Professor Fitzgerald, thanks for joining us again. Appreciate it.
Thanks for having me.
Thank you. And he joined us on our turnkey.pro answer line.
You're listening to Chicago's Morning Answer with Dan Proft and Amy Jacobson on AM 560. The Answer.
This is Hugh Hewitt for townhall.com. Speaker of the House Kevin McCarthy's triumph in gaining the gavel after 15 ballots was perhaps sweeter than anyone not named McCarthy knows, because it was so very hard to gain and because it was so long in coming. McCarthy's road to victory began long before his first bid for the Speaker's gavel came up short in 2015. It began before McCarthy joined the House in 2007, even before he was elected to the California State Assembly in 2002. Perhaps it began when McCarthy was still in college and he started as a staffer for Bill Thomas, the California Republican in the House for whom he worked for 15 years. McCarthy won because enough Republicans know the value of their party and the work that it takes to build it. As the new speaker distributes the fruits of his long struggle, McCarthy won't be punishing